In this video, we're going to take a look at InvestEngine, a new ETF platform here in the UK. Welcome back to the channel, everyone. If you're new, we talk about investing in personal finance here on the Inkmattic channel. So hit the subscribe button and the bell notification so you never miss a new video. What is InvestEngine? The platform aims to help investors in a way that suits them. If you're looking to manage your own ETFs or leave it to the experts, they offer both options for investors, with relatively low or no platform fees depending on which option you choose. Is InvestEngine safe? They are fully regulated by the Financial Conduct Authority, which is a UK regulator, and investments up to $85,000 may be eligible for claims under the Financial Services Compensation Scheme, FSCS that is. So let's take a look at the accounts they offer. InvestEngine offers 3 account types, 2 personal ones and 1 business account at the time of recording this review. The first option is the personal account. This is essentially a GIA account, also known as a general investment account. This is a taxable account. While the personal account isn't tax-free, UK taxpayers may benefit from a £2,000 dividend allowance and a £12,300 capital gains tax allowance in the tax year 2021 to 2022. That can be set against returns to reduce tax liabilities. The second option is an ISA. You know we love a stocks and shares ISA on this channel. For those of you who don't know what an ISA is, it stands for an individual savings account. Essentially, it's a tax-free wrapper that allows individuals like us to invest up to £20,000 a year. There is no income tax or capital gains tax to pay on any income or profits generated through this account. The final account that InvestEngine offers is a business account, giving businesses the opportunity to invest cash for potential higher returns. This is great. I've not seen this option on any other platform that we have covered on this channel or at Inkmattic.com. In this review, we will be using the personal account. The sign-up process is pretty straightforward. Some simple questions about your personal details and a national insurance number are needed. They really have made it pretty easy by integrating TrueLayer so you can add your funds to your InvestEngine account in a few simple steps. Before we go any further, InvestEngine have a welcome bonus. At the time of recording this video, InvestEngine are offering a £50 welcome bonus when you deposit £100 or more into your InvestEngine account. Don't forget to use our affiliate link in the description and pinned comment. It really helps us out a lot at no extra cost to you. Let's talk about creating a portfolio. When creating a portfolio, you need to choose which type of portfolio you want, whether it's a managed portfolio or a DIY one. You can create multiple portfolios in your InvestEngine account. Let's start off with the DIY one. This is extremely easy to create. Literally pick the number of ETFs you want to include as part of your portfolio. There are over 150 ETFs to choose from, and that's it. It's that simple to create a portfolio. Now, if you're creating a managed portfolio, InvestEngine will ask you a few more questions to learn more about you, your goals, and your risk levels. Some of the questions they ask are, do you want to create a growth or income portfolio? How much are you planning to invest? What will be the proportion of the total investable assets this portfolio will represent? How long you plan to invest? And a number of other questions to get a better understanding of you. After you have answered those questions, they will tailor a portfolio to your needs based on the answers you've provided. In our case, we got a more risky portfolio. Our projected returns by 2030 are as follows. If the portfolio performs exceptional, our returns are expected to be over 148%. Good, between 92 and 148%. Expected, between 37 and 92%. Poor, between 9 and 37%. Worst case, under 9%. Total contributions for this period is £10,800. As they have stated, the chart should only be used as an indication of the range of potential outcome based on the portfolio allocation you have selected above, as well as the initial and monthly investments and time horizon. The information provided does not constitute advice or promise of future returns. InvestEngine's optimal portfolio is based only on the information you have provided and as part of the risk questionnaire. As we have mentioned in our review on Inkmattic.com, we have stated that income portfolios tend to favor bonds, in our opinion. Let's talk about the fees now. This is where it gets interesting. Let's talk about the two options. On this platform, you can create a DIY portfolio, and the concept is pretty straightforward. It lets you pick and choose what ETFs you want to invest in and what percentage you want to allocate to each ETF. Like we've said, there are over 150 ETFs to choose from, which is great. And the best part is that there are no platform fees when choosing this option. The second option is to go for the managed portfolio. This is where InvestEngine will manage your portfolio to suit your needs based on the questions you have answered when creating the portfolio. This can be a mixture of stocks, ETF, and bonds. The platform fee is 0.25%. No matter which portfolio option you pick, there are no setup fees, no withdrawal fees, and no dealing fees, and no ISA fees. It's also worth mentioning that with any ETF, there is a fee involved. Although you may not notice them, they are always factored into the price and vary between the ETF and the ETF provider. This is something that's worth factoring in when considering the platform fee with a managed portfolio, also with the DIY one as well. You will want to work out the average ETF fee in your portfolio plus the 0.25% platform fee that's charged on the managed portfolio. Like with any ETF, it's worth working out what the annual fee is. For example, with the Invesco S&P 500 High Dividend Low Volatility UCITS ETF, which we have in our DIY portfolio, the current annual charge is 0.3% per annum, and this is charged from the ETF provider and not by InvestEngine. And this fee is factored into the price of your ETF. These ETF fees do vary between the fund and the ETF provider. An example of this, the other three ETFs that we have in our DIY portfolio, the Vanguard All World fee is 0.29%, the iShares Physical Gold is 0.16%, and the MSCI Emerging Markets is 0.15%. Now, when we take a look at the managed portfolio, you need to work out what the average fee is between those ETF providers, and then add on the 0.25% platform fee that InvestEngine charges on top of that to make sure it's worth your investment. Let's talk about funding options for InvestEngine. There are three options to fund your account. First is via the open banking, which is a convenient way to send funds to your InvestEngine account. We prefer this option. The next one is direct debit, and this is a great option as well. You can set a monthly direct debit and kind of like forget about it and kind of look at it as like another bill, but at the same time, it is definitely going to be adding it to your portfolio and helping you achieve your total goal. And the last one is manual transfer. So let's move on to the final verdict. This is a really good platform if you're going to be investing for the long term, let's say 10, 15 years. Because these funds are pretty much what they're for. They're for long-term investing, and you're going to be growing with the market in most cases. We really like this platform, especially the DIY portfolios, because there is no platform fee with it, and you're only paying for the ETF charges. For us, it's definitely a good thing because we're only investing in ETFs on this platform. As you know, on this channel, we do like to dive into individual stocks, but we have been saying over the last few months that we do want to be investing more into ETFs and having more exposure to that as our overall portfolio. So this is what we're hoping this platform is going to do for us. And we're expecting to have a larger exposure to ETFs on our overall portfolio. Drop us a like and a comment in the description if you would like to see a 1-year update of this portfolio later down the line and see how we're getting on and what we think of this platform after a year's worth of use. If you're interested in signing up, you can get a £50 welcome bonus using our affiliate link in the description or pinned comment. That's it for this video. See you in the next one.